Good morning, traders. Welcome back to another live stream. I hope you're all doing well, and happy Friday to you. Love the Christmassy theme. Actually, the Christmassy theme sort of fits my chart styles. I just noticed that. I have like the green and red. It's almost like the same color. It's pretty close. The reds are pretty much the same color. But anyways, hope everyone's doing well. This is going to be the last live stream for the year, at least from the office. The rest of the year, our team will be working from home, which is pretty exciting. Spend some time during the holidays, staying cozy, staying warm at home, which would be nice. A little slower pace. Usually the trading crowd, the markets themselves sort of slow down a little bit towards the end of the year. So we'll have a little bit more time just to work from home. So it'll be nice. Anyways, hope everyone is doing well. We've got S&P 500 and NASDAQ just a little bit lower here this morning following the crazy candle that was the NASDAQ's move yesterday. Had this huge move lower followed by a push back higher. I'm watching this level pretty close. Very curious to see if we can actually hold this 25,500 level. You've got support looking left from yesterday's low. In fact, I'm actually probably going to trail this stop a little bit further because you had a really nice little intraday spike back to the upside. If we drop down quickly to the 4-hour time frame for a moment. In fact, what I'm going to do here is I'm going to just mark this up on the 4-hour as well. If I draw in my support levels here. So NASDAQ held really nice. I'm going to template this demand 4-hour chart. So yeah, NASDAQ held really nice yesterday as you came down into this support area once, and then a second time. We saw a really sharp reaction, pushed up, and then you had a little bit of selling that took place in the after hours, largely due to Broadcom. Broadcom down 5.4% here in the pre-market. It was down 1.6% yesterday. So, pretty sharp little sell-off on Broadcom overnight. From the highs, of course, you're down about 10.5% from where we left off yesterday, or the high of day yesterday. Talking about an 8.5% pullback. So the stock's been on a run here recently. So it had some room to pull back a little bit. Expectations were high going into this. They did beat on the top and bottom line. I haven't admittedly looked very close at the Broadcom earnings. So I just know that obviously price action selling news, there's something they didn't love in there. So dollar index is a little strong here at support. We talked about this level yesterday. We're coming into this 98.50 area of support. Looking left, this was a pretty critical spot where, the bulls took it to the upside. So we'll see if bulls are able to kind of hold this area again. Recent flow or recent trend seems to be shifting to the downside. I wouldn't be surprised if you get a little bit of a bounce here. But I do still think there is downside for the dollar to go lower. And that should also continue to bolster precious metals. Take a look at gold here, guys. Gold is finally waking up from its 2-week sleep. It was in a coma for a couple weeks here, really didn't move anywhere during this period of time. This is a daily chart. So we had the breakout yesterday, some follow through today. This is beautiful. I am long. My plan is to continue to trail stops on this trade. And I think we're headed back. Now it's not far away, headed back to all-time highs. Silver's been breaking out the last few weeks. It's been a monster runner. It's nice to see gold trying to pick up the pace and try and join the rally. Love to see it. So I have some stuff to do today in terms of my trading. Pretty much my main 3 trades. I'm also long euro pound. Euro pound's doing well. It's been a good trading week for me. Long euro pound is doing well. Long gold is doing well. And long NASDAQ is overall doing well. A little bit of give back here today. Choppy this week for the most part. But here's my thought process on the NAS. I am comfortable staying in the trade as long as we don't break support. I'm just trying to figure out if I want to move this stop loss here or if I want to keep it here. And, I'm going to actually, I think for now, until, maybe if we break away and close higher, I'll probably trim that stop higher. But here's the thing, reason why: NASDAQ has a really solid score on EdgeFinder, plus 10 score. This has been a really strong reading the last few months from NASDAQ. So I'm going to continue to stay with the trade until it breaks, right? At some point you will get NASDAQ rolling over. It doesn't go up forever. That is for sure. You will have, larger sell-offs that come back in. But I think the NASDAQ story is still heading back to retest these highs. You've had, what many initially called a dead cat bounce. Seems like more than that, at least for now. Although we are kind of slowing our roll here, chopping back and forth. And I think for NAS, what I'm looking for is a breakthrough highs in order to trail that stop. If that happens today or tomorrow, or I should say Monday, that gives me a little bit more of a chance to move stops, lock stops further in on NASDAQ. Nick, I just bought the EdgeFinder. Finally had some money left to get some right tools to get my swing trading going. Salute to you, my friend. Congrats on the purchase. I'm glad that you got some tools. I was watching something about the Bloomberg terminal. Do you know it's $30,000 a year to get a copy of the Bloomberg terminal? That is insane. It's so priced out for the average everyday trader that it inspired me and A1 Trading to build what we're building. We're building tools for the everyday trader, not for hedge fund managers. Again, all the power to the Bloomberg terminal. It's an amazing platform. It's an incredible tool, but it is $30,000 a year to get a license to Bloomberg terminal. EdgeFinder is $770 right now, one time. What you would pay now, granted, I understand EdgeFinder is not the same thing as Bloomberg terminal, but I would argue it's more useful. The Bloomberg terminal is really cool, but it's so much data and so complicated and so advanced that I think it actually defeats its own purpose. This is my personal opinion, and I know I'm a little bit biased. These are my competitors. But EdgeFinder is not meant to be PhD level stuff in order to open it and even understand what you're looking for. The EdgeFinder is meant to, do you know who our ideal customer is? Do you know who our ideal customer is? Somebody who has a general grasp on macro, but wants to learn more about it and automate components of it. I'll say that again. The ideal customer for EdgeFinder is somebody who has a general sense of macro, but wants to learn about it, because the EdgeFinder is highly an educational platform too. And somebody who wants to automate the process of doing fundamental analysis and incorporate it into their trading. That's our mission. Our mission is to build something that is user-friendly, cost-effective. These things are very expensive to build and run. Like, I understand why it's $30,000 a year. It's a monster product, and there's monster bills they have to pay to build those sorts of things. I mean, there's teams of people they have to pay salaries for. I get it. It's a very expensive thing to build software. I know personally, but we build something that is cost efficient for the average trader, not necessarily somebody who's a hedge fund ivory towers trader. And I think that's where we found our niche. That's where we found great customers all around the world. So yeah, that's the primary objective for EdgeFinder, is something user friendly, helps you learn macro, and helps to automate it. And grab it right now because it's currently 45% off. You have huge discounts going on right now for our holiday sale. If you don't have a copy of EdgeFinder, get 45% off by sending us a direct message on our website. Emily from our team is standing by. She can help set you up with a copy on a payment plan if you need it. Again, our goal is to offer powerful tools at really affordable prices that are user-friendly to people who are just getting into macro trading. That's our primary customer. If that's you, if you're ready to take your macro to the next level, grab a copy. So I still like the NAS trade. I've talked about this a couple times. Also, a little bit of a teaser for my EdgeFinder super fans. This data right here, ADP JOLTS job openings, and initial jobless claims, these data points are not yet in the top setups algorithm, but will be soon. These statistics, the jobs market stuff, will be making its way into the top setups algorithm. So we're incorporating the logic that we find here, actual versus forecast, into the top setups algorithm. It's not yet in there, but it will be soon. I'm excited for it. The way to read this is that the initial jobless claims recently came in worse than expected. That would be bearish dollar, bearish stocks. JOLTS job openings came in better than expected, bullish for both. ADP came in worse, bearish for both, right? And so that will factor into the scoring once this gets updated. Nick, is there a specific reason for gap down on the NAS? Yes. Notice Dow Jones is flat today. Tech stocks are down today. If you are somebody who trades NAS, you need to start trading stocks too. Not necessarily trading stocks. Let me take that back. You need to start watching stocks too. Because here's Broadcom, huge semiconductor stock. This is NVIDIA's like one of their biggest, rivals. Broadcom, something in their earnings was disappointing to investors, causing the whole tech market to have a little bit of a freak out. Oracle did it yesterday. Part of the reason, tech was soft yesterday was Oracle came in and actually beat I think they had soft revenue. Yeah, they had soft revenue versus expectations. And people didn't really like that. So you have to keep an eye on these really big players matter quite a bit. Why is gold ripping? Fed's going to cut rates. Labor market looks a little soft. Dollar's weak. National debts are high. QE is kicking off from the Fed. Gold makes a lot of sense to me to stay bullish on. Currently still, I believe, let me check. Yep, gold is getting one of the strongest readings on EdgeFinder right now. So is Bitcoin. We need to check out Bitcoin. I wanted to be long on the Bitcoin trade, but I don't have it right now. I don't have it yet. From a technical perspective, I am looking for this. I'm looking for this breakout. Show me some signs of life here, right? If you give me that Hulk candle to the upside, that's kind of what I need to see momentum shift from just this downward trend we've been in to a bit more of a upward trend. EdgeFinder is more useful than Bloomberg Terminal. I'm waiting for you to move development to a JavaScript setup of responsive UI, and you can do whatever upgrade you want. Maybe someday, Bulent, that's for sure. It would be a big uprooting process. I mean, this is 4 years of development in here. So for us to start over, it would be, quite the setback. Plus, I honestly really like Looker Studio, like what we've built it in, which is Google's Looker Studio. I quite like it. I know it's not as real time as it could be. Like if you were to go Bloomberg Terminal, all that stuff is like very, very real time. But I don't necessarily think we need real time for a lot of what we're doing. Like if we're just looking at, sentiment, economic growth, inflation, jobs market, a lot of this stuff is not changing second to second, right? It's changing day to day. And so we're just really having a matrix of data and giving a general bias. I have some people asking about the yen. Let's take a look at some yen pairs. Dollar yen. What's going on with the yen this morning? Japanese 10-year yield is moving higher alongside US yields moving higher as well. There's some headline out there that I'm missing today. Because yields are moving higher. Stocks are lower. Silver continues to rip. My goodness. Copper's higher. Euro dollar, a little bit soft here this morning. Pound dollar also soft. I'm still looking for long setups on things like AUD, USD. So if we get some pullbacks, that would look interesting to me for some upside continuation. Ray Beast has been patiently waiting for Aussie yen. Here's Aussie yen. Still looks strong, looks bullish. I believe it is a bullish setup. Yeah, it's a bullish setup on EdgeFinder. Has been for a minute. So I've been wanting to be in this trade, but I haven't had enough of a pullback to get me into the trade. I still like it to the upside. If I'm drawing fibs here, you're talking about pullback from here to here, 61.8% retracement. The Aussie yen and yen pairs in general still look strong for now. If you were to get a pullback to the 618, I'd be potentially interested. But no setup right now. I like a lot of the yen pairs. They've moved too far without me. I can't chase them. So I have no yen trades right now, but if we were to check this out, we added a search bar, little convenience factor. Type in, if you're an EdgeFinder user, type in like JPY, hit enter, boom, look at that. Just your yen pairs. So small things, man, small little utilities like that added to EdgeFinder over time makes such a difference. Because if you're somebody who uses this thing every single day, that made a difference. Like if you're somebody who's a currency trader and you're like, I just want to see the yen pairs, boom, that just saved you every single day. It saved you a bunch of headache. So anyways, Euro yen, Aussie yen, Kiwi yen, Ray Beast, if you're asking, so if you're asking me if you should hold your long, you should do what your strategy says. 100% of the time, your strategy is what should guide whether or not you are long, short, closing, taking profits, taking stops, etc. 100% of the time, you should never ask someone else, should I buy? Should I sell? Should I close? Should I take a loss? If you're asking other people that, and I'm not trying to drill you, I'm trying to be very real with you. If you are asking other people what to do with your trades, start over. You're not in the right spot. 100% of the time, your trades, you should have a plan before you take the trade. So let's just say I'm long Aussie yen right now. This is just how I would do it, but everyone has their own thing. I say, okay, Aussie yen has a bullish rating on EdgeFinder. Cool. Let me see if I can find a trade that I like in accordance with that. And maybe you don't like this call, right? Top setups is not a holy grail. It's just a screener. Just like any sort of like, oh, the trend is up, but you might not like that trend, right? EdgeFinder giving a bullish reading on Aussie yen. Let's just say I caught this move. Let's say I'm long here. For me personally, I'm trailing stops behind major structural points. So if I'm in this trade, I'm looking at this and I'm saying, okay, I'm long. I'm assuming I have this awesome winner, right? This is a big assumption, but let's just say I had this trade on. If I'm in this trade, I'm saying, okay, we pushed off this again. We jolted higher here. Yesterday, we had an intraday reversal right around here. I'm probably taking this stop loss. I probably had already trimmed it here when it got to this point. And at this point, right, if we could get that breakthrough here, I'm going to probably trail that stop higher. That's how I would manage that trade. But that is not necessarily how you should manage that trade. I hope this is making sense. But at the end of the day, I've done a lot of research and put a lot of time, a lot of demo testing, a lot of back testing. I've practiced what I do for a long time to build my style that I'm comfortable with. Some people really psychologically hate trailing stops, and I get it, because sometimes, watch what happens. Appreciate you, Rabies. Again, I'm not drilling you at all. I'm not trying to call you out or anything. I understand if you're in a trade, you're like, all right, how are we looking on Aussie yen? Totally fine. I'm just saying from a trade management perspective, that's how I would manage the position, but how you manage the trade might be different, because you know what? Some people really don't like trailing stops. So I trail stops. So I'm in this trade. Here's my stop. I'm trailing it. That works great when the market's moving in a one directional way. But as many people will know, sometimes the market doesn't move like that. Sometimes the market chops around and let's say you catch this move, right? Watch this. You want a frustrating example of trailing stops. Let's just say that I took this trade and I will trail stops upon a break to new highs. That's typically how I will manage the trade. So let's say I'm long Aussie yen right here. I go long, price moves in my favor, right? I don't do anything with it right there. There's nothing for me to do. I need it to break structure for me to trail stops into profit. We had no structure to trail behind, at least on any sort of higher low on the daily time frame. I wouldn't trail stops below this because I would need that to break through the highs. So I'm showing you the weakness in my strategy, my technical exit strategy. The weakness is I would give back 100% of those gains and then take a loss. Doesn't sound very fun when it doesn't work right? Nothing works all the time. And then you might say, well, yeah, but you should just take some partials. That's the obvious fix, right? Sure. But what happens when you take partials and then there's nothing left of the winner when it actually makes the move? Boom, that strategy looks dumb sometimes. Doesn't matter what you pick. You name your strategy, it will look so dumb in some markets. It will also look brilliant in other markets. My approach of trailing stops, I've picked my poison, which is what I, jokingly say is like, everyone's got to pick their poison in markets. Nothing's perfect. Nothing is perfect. So if you're trailing stops, guess what? You're going to give back winners sometimes. If you're taking partials, guess what? When the real move happens, you might just have barely left to your trade and it really won't make a difference. And if you take quick profits, you're going to give it up when the market rips in your favor and you only took a 1-to-1 when you could have took a 1-to-7, right? Nothing works all the time. Accept what you accept. You have to choose. What my favorite nerdy example is? If you've ever played a video game where you choose a character class, like let's say you can be the character who's really strong, but really slow. Or you can choose the character that is really fast, but not very strong. You can choose the character that's really smart, but not necessarily very physically able. But in trading, it's that same way. There's no class or strategy that just is impervious to drawdown. It doesn't exist. And the sooner you accept it, the better off you're going to be. Because if you can't accept that, if you're looking for holy grails, you will chase your tail for years and years and years. Can I steal your strategy? 100% you can do what I do. If you like what I do, implement it in your own way, right? My strategy is a combination of, I have no secrets on my strategy. You're not stealing anything because it's free. What's not free is buying the EdgeFinder transparently. Fundamental analysis, I use the EdgeFinder. Sentiment, I use the EdgeFinder. Technicals, I use simple price. Price action, this is the simplest component of my trading. Trailing stops, there's no magic there because trailing stops work sometimes, it works terribly other times. Where the closest thing to magic comes from is to build confluence through the use of fundamental analysis and sentiment analysis, knowing what the crowd is doing, knowing what institutions are doing, to find risk to reward setups that are really juicy, right? You want that sweet risk to reward. You find that by looking for contrarian signals. By the way, we have a crowd sentiment tool section here. We also have the COT data. Did we get any new COT data? December 9th? Okay, no, nothing too new here. If we look at like the put to call ratio, one of my favorite tools for adjusting or for identifying crowd sentiment. So put to call ratio for the SPX right now is in middle ground, meaning it's kind of neutral. It's not too bullish, not too bearish. If we take a look at gold, gold is also sort of in middle ground. Yep. So sentiment's neutral on gold, interestingly. NASDAQ's really bullish. People are really bulled up on the NASDAQ right now. So that would make me a little cautious to go chasing longs on the NAS. Because if the crowd sentiment is bullish, right, a high call volume, that's what we're looking at. We're looking at options flow here. So if options flow is very, very bullish, then I probably want to let off the gas, right? I bought EdgeFinder in August of 2025. Since then, it's made me more gains than its cost. Congrats on the success, Sanjeev. I appreciate your sharing your testimony of EdgeFinder. Nick, do you have a public backlog for EdgeFinder? I'm not sure what you mean by that. Can you clarify what you mean? Hold on, I'm going to sneeze. Excuse me. Nick, do you trail your stop on lower time frames for tighter control or stick to the same time frame? Generally, I'm operating on the 4-hour and the daily time frame. That's where I personally like to hang out. I watch a lot of charts, so I find if you have like the 1-hour chart and you watch as many charts as I do, that's just like too much. It's too, like, I like the higher time frames. I find them to be less noisy. I find them to work really well with my strategic approach. And I have a lot of charts to watch. I watch indices. I watch international indices. I watch the VIX. I watch the dollar. I watch Bitcoin, other cryptos, silver, gold, oil. I have a lot of charts to watch. And so the daily time frame still produces across this wide span of things that I watch. It creates enough signals for me to still find trading opportunities regularly. Nick, do you have a video discussion on yields relative to Forex and stocks? I do. Let me see. Let me see if I have it. Do I have that? I could have sworn I do have a video that's perfect for you. If you have me on Discord, message me on Discord. I'll give it to you. I have it on my YouTube channel. I just have to go find the link. So anyways, sentiment is a key role. Fundamentals are a key role, and technicals play a role as well. So it's the combination of all of them. Like euro dollar, let me map out an idea that I have on euro dollar right now. So euro dollar, if I go, let's go USD pairs. I just love having that search feature. If I wanted to look at like euro pairs, boom, just euro pairs. Euro dollar, euro yen. It's like the simplest little thing we added, and it's so useful. Euro dollar is getting a nice reading overall. Euro yen is also getting a strong reading, has been for a while. Euro dollar looks good if we can get a pullback. I like this setup. Why do I like this setup? Well, euro dollar, actually, watch this. This is cool. Euro USD. I can go column by column here. Trend is good. Seasonally, it's a decent time. COT data kind of disagrees with it. So institutions not so bullish on euro dollar recently. Crowd sentiment, though, bearish, giving a contrarian bullish reading. Economic growth, mostly mixed. Retail sales slightly favor Europe here recently. Inflation statistics favor Europe across multiple facets, with US inflation being a little softer than anticipated recently. Employment change slightly favors the US. So when I look at this, I like that setup for pullbacks, right? So that kind of just completed my whole process for me, this top setups algorithm. EdgeFinder is expensive for my country. Send us a message. We offer extra discounts for people in places where the US dollar is very expensive. If you are interested in finding out more, we'll drop a link here in the chat to where you can speak directly to our support staff, let them know, and they'll set up a payment plan for you, make it easier for you. There you go. Yes, the people know. Send us a message. We'll drop that Telegram or talk to link here if you could, James, for that. If you have any questions about that. Are there going to be future updates on EdgeFinder? Are there going to be future updates? I'd get bored if we didn't have more stuff to build. Yeah, tons. Here's that link. Click that link, send a message. Just let them know you're in a place where the dollar's expensive, and they will help you up with like a payment plan, make it easier. Yes, we have installment plans. Just message here. Or yeah, there you go. So euro dollar is a setup. I like this one. If we get a pullback, that looks good. We've had some recently soft economic data out of the US. I think you have some upside for some currency pairs. Look at the US stock market just opened up. NASDAQ's a little bit softer here this morning, down 1.13%. I'm bullish until if you get this break here of support. At that point, I'll take profits and move out of the trade. But we've had just a straight shot to the upside here. We'll see. Anyways, guys, the next stream is going to begin here in just a moment with Marco. Marco's trading journey, going to be going over some ideas and setups that he's currently watching in this market. If you are not already using EdgeFinder and would like to be, like I mentioned, send us a message in the chat here down below. Just click that link, send a direct message to our support staff, and they can get you set up with that discount, the 45% off sale happening right now. Or if you need a payment plan set up, they can help you out with that. All right, up next, Marco's trading journey. Stay tuned. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. I hope everyone is doing well. Hope you had a good week in the markets. So, what shall we look at today? Well, I have an update. I have closed all of my dollar positions. So NZD/USD I've closed. Just a manual close, actually here on the almost the top on the yesterday's daily candle. So this was a 2.2% winner or 2.2R winner, and the euro dollar trade I closed as well. I closed it for around 1.9%. Okay, so I'm out of the positions. I'm flat. I don't have any position in the markets right now. You may ask, what is the reason why I got out? What is the reason why I manually closed these positions? Because I was pretty much blabbing on how I'm going to trail my stop loss and I'm going to keep bullish or bearish on the dollar, bullish on the New Zealand dollar, for example. Well, it is the 12th of December. Year is ending pretty soon. I'm not expecting a lot of volatility. I'm actually expecting some possible range-bound price action with a bit of a slowdown. So you have to note, most market participants, the big players, the whales, they're just like me and you. They have families, they have obligations, they want to take a break, they want to go on vacations. They usually do it end of December, maybe beginning of January. So things can be a bit slow end of December, especially around Christmas, and then beginning of January. These positions were negative swaps. So as long as I kept holding these positions, I would need to keep paying for negative swaps. We can quickly check that in the EdgeFinder. Actually, one of the things I use very, very often is the carry trade scanner. Since I mostly trade Forex, so euro dollar, negative swaps if you're buying, and NZD/USD, negative swaps if you're buying. This is kind of a big one. This is a pretty expensive position to buy. You have pretty high swaps. So if I held these positions for, let's say, one more month or maybe a month and a half up until, let's say, the 1st of February, I run the risk of getting some hefty swap fees, let's say swap penalties, which is not really the most ideal thing to have. And then I got a very nice opportunity yesterday with the big pump after the Fed. So the big push to the upside after the Fed interest rate decision, I got the opportunity to exit into strength, which is the best position you can have, that you close trade into strength. And also things started to look a bit overbought. There was a big explosion. We were very far from the 20 MA. Same on the NZD/USD. So what is the game plan now? To be honest, the currency pair I still like the most is NZD/USD. Still my favorite. There's been a clear flip on the RBNZ. They flipped from dovish to hawkish. That means dovish is bearish, hawkish is bullish. So NZD should appreciate. And then the Fed has announced rate cuts. So you're getting rate hikes for the RBNZ and you're getting rate cuts for the US dollar. That should create a perfect storm for this thing to continue going higher. Now, I'm looking for a bit of a pullback. If we do get a pullback, if I can get in on a better price, I'm going to be interested to re-enter my position. But at this point, price did seem a bit overbought, a bit overextended. So for me, I decided it was worth just taking the profits, closing the year, and maybe trying to re-enter a bit lower. So that's my whole thesis on the US dollar. I'm still bearish. I'm still bearish on the DXY. I don't have crazy targets. I don't think we will go to, let's say, 95, or I don't think we will even crush these lows. But I think the rate cuts should at least push the DXY a bit lower, right? And maybe we are a bit oversold right now with this massive post-Fed momentum. As you probably know, on Wednesday we had the Fed interest rate decision. It was a bit more dovish. So the actual event, the statement was dovish, while the future projections were a bit more hawkish. Okay, and also I've been doing some research, and from what I see online, the concern between the, let's say, citizens of the United States, the concern is not really with interest rates; it is about inflation. So possibly the focus has shifted a little bit from interest rates to actual inflation. As I keep blabbing on, if we look at the CPI in the United States, US dollar, CPI is 3%. That is elevated inflation. You don't want to get a higher number than 3%. You don't want a higher number than 2%, but it is what it is. So the Fed definitely doesn't want to see inflation creep up higher at this point. So if you keep your ear to the streets, you would notice that most people are switching, or a lot of people are switching from talking about interest rates to actually talking about some inflation issues in the United States, which is a bit hawkish, right? The central bank, although they like to say that they are for the people and that they work for the people, they actually work for votes. They work for popularity. As everything in politics, it's all about popularity. It's all about getting the votes. So if the current popular issue is inflation, then they're not going to cut as aggressively. So something to consider, something for me to watch for in the future, especially January, February, essentially the next Fed meeting. So we need to see how the Fed is breathing. We need to get all of the data because, as you also know, we had a big delay. We had a big US government shutdown. On my watch list, I still have silver. So silver has had a massive explosion higher. I'm not sure if I should just keep holding silver on my watch list because I was interested to buy at this point. I was looking for a pullback. So I was looking at a support level for a pullback to get to the close to the 20 MA. It didn't happen, okay? So essentially, price just exploded higher. I'm not the one to chase the price. I'm not the one to get in at all-time highs, just not my style, doesn't fit the trade plan. So I need a pullback. Looks like we're gonna get this again. So just a massive explosion, no pullbacks, no correction, no opportunity for me to get in at a better price. That's too bad, but I have to follow the plan. So the plan was always look for a pullback, get in on a buy limit around the 20 MA. So if we do pull back, I will get in. If this happens, I will try to take a stab at it. And in trading, the hardest part is not so much the direction. So it's kind of easy to call the direction. I can tell you right now, for this new year, for 26, I think silver goes up, dollar pairs go up because the dollar loses value, S&P goes up, NASDAQ goes up, Gold goes up, Bitcoin stays a bit flat, Ethereum possibly even bearish. The trickiest part, the hardest part, is getting an entry. It is to structure where will you enter? Where is your stop loss? Where is the take profit? For example, on silver, my last position was correct. I picked the right direction, but I got prematurely taken out. So that's the hardest part. The hardest part is to actually structure a position and do proper risk management to exploit these trends. I know Nick, for example, he tends to take a lot of probes before he eventually catches a nice buy setup. I think a good example is the NASDAQ, where he took, I think, 1 or 2 losses, or maybe even 3 losses in this downtrend before he took a great buy limit like this, which is now running in a very, very good percentage, in a very positive reward to risk. So this winner pays for all of the losses and then some. Okay, so that's the tricky part. Picking the direction, it is tough, but it's not the hardest thing in the world. There's a lot of analysts that are correct but broke because they can't execute, so they can't structure a trade. Okay, so let me check the comments. So Crypto Art says, do I get a student discount on the EdgeFinder? I'm sure if you reach out to the team for the EdgeFinder, they can get you some sort of a discount, or maybe a cheaper price, or maybe an installment plan, something to help you. But I don't think we currently offer a student discount, or that the A1 team currently offers a student discount. Something for the team to explore for sure. Do you think the markets are getting too algorithmic for retail traders to keep up? I've been trading for a bit. It's something I keep wondering about. No, I mean, the markets just keep on changing. So basically, some years you have specific conditions, other years the conditions change. This year, for example, Trump came in, crazy tweets, crazy announcements, crazy tariffs, crazy deals being done. He changed the market. He changed the market environment. Forex, for example, this year was pretty slow except for the dollar. The dollar was a big mover, but everything else was pretty slow. But stocks were crazy. Gold and silver had a rock star year, absolutely freaking crazy. So I would say the main, gold is up on the day 1.43% and going to all-time highs. Okay, this is pretty good to see. So this is a pretty interesting move happening on gold. I think algorithmic trading has probably killed your edge on the lower time frames. So maybe like the 1 minute chart, maybe the 5 minute chart. I think those types of quick movements, you're going to get killed by algorithmic trading. But swing trades, day trades, 1 hour chart, 4 hour chart, daily chart, it's okay. The algorithmic trading cannot really touch those higher time frames because they don't have enough volume. They can trade very quickly, but they don't have enough volume to move the chart on, let's say, to move the daily chart. Not gonna happen. Hey Marco, I reckon this is your last stream of the year too. Nope, I'll be streaming into the year's end. So as long as A1 keeps putting up live streams, I'll be present. Congrats on NZD/USD profits. Thank you very much. How do you know when to close? Well, most of the time I use a fixed take profit or a trailing stop loss, but sometimes I just go by gut feel. So I sort of have developed a sense of when it's good to exit the market. It's just something that comes with experience. It's not the most efficient way to exit the markets, but if I'm in positive profits, if the reward to risk is positive, which in this case it definitely was, it was 2.19 to 1. I saw the environment. I saw an explosion higher. I know it is the year's end. I know I'm paying negative swaps to be in this position. The liquidity is going to die down as the year ends. So I kind of want to take the profits. It was a pretty subjective decision, but I'm still pretty happy with it. And of course, we had a nice explosion higher after the Fed, which was another bonus to exit the position because I sold into strength, which is a great thing to do. So Sluggy says, I caught the EuroCat shorts and Cat Swiss I told you about floating into okay profits. Awesome. That's great to hear. So congrats to Sluggy. Maybe a bit later we can open up those trades on the chart. Marco, how you expect to make a month? I'm not sure what your question is. How much in percentage? I think making 2 to 3% per month. If you can do it consistently, you're a rock star trader. You have to know that the best trader in the world, Jim Simmons, made around 60% on average per year. Most traders cannot make more than 10%. Most traders cannot beat the S&P 500. The good traders make 20 to 30%. And that's like really good traders. I'm talking about SMB Capital traders. I'm talking about Chris Palmer. I'm talking about Nick. So I think they make on average 20 to 30% per year. So that's like the top level. And then on top of that, you have Jim Simmons and all those crazy quants that are just absolutely nuts with math and analysis and AI and this and that, and have a million resources at their disposal. So if you can make 20% per year, you're a rock star trader, and do it consistently, of course. US bond yields are up today. Let's quickly take a look. 10-year. Yeah, kind of. Yeah, up on the day, but I wouldn't say this is anything super massive. Just some sort of choppiness around this price. And I do want to take this time to mention the sponsor of today's video. If you guys are looking to expand your trading capital, I highly recommend you check out DNA Funded. Great prop firm. You can get 25% off with the code A1Live. Okay, so A1 Live gets you 25% off a DNA funded challenge. This is my personal 50K two-phase funded account. I'm trying to get a payout. Unfortunately, I'm down minus 2K. Essentially, I have 2 trades running, SPX sell and a UJ buy. So this is in profit, this is in break even. I'll see how it ends up, but so far I've been pretty happy with DNA. No complaints. They are ran by professional people. It's not a kid in a basement. There's a big broker behind DNA Funded, and they're using TradeLocker for trade execution, which is amazing. TradeLocker, by far the best software I have ever used. So check it out. A1 Live gets you 25% off. DXY to 95. I don't think we're going to hit 95. I mean, it's a very ambitious target. In my opinion, it's a pretty crazy target. You have to zoom out. So please look at the DXY, zoom out. We already had a crash. Usually, for such a crash to happen, you need something to be fundamentally broken. That was the tariffs and the uncertainty surrounding Trump. You also have to note, being short on the US dollar is very, very expensive. Don't believe me? I was short, meaning I was in NZUSD buy, Euro dollar buy. The swaps were pretty heavy, not gonna lie. So the swaps were pretty expensive, and I held the trades for 2 or 3 weeks. Imagine holding a sell position on the dollar as a hedge fund for 1 year. Imagine how much you will be paying in swaps. So I'm not sure that the big money, I'm not sure that the whales want to be short on the US dollar. Even if they do, I'm not sure they want to crash it to 95, because you need a massive, massive catalyst for this chart to go to 95. Okay, it doesn't happen overnight. You need a clear fundamental reason, and I don't think dovishness of the Fed is enough of a reason to push it to 95. Buzz down on a gag. What the hell? Hey, Avi, what's up? Would you mind? So Yerlan, are you Blueface? I think that's a song from Blueface. AV, would you mind going through the real yield heat map on the EdgeFinder and how you might use it in terms of FX? Yeah, sure. So that's a good question. Let's see. So this is a new feature. If you go to the economic, where is it though? So it used to be in the above the heat maps. I'm not sure where it is right now. So maybe here it is. So real yield heat map. It was moved. Essentially, quick explanation. So this is a new feature. As you can see, we have top, what is it? 1, 2, 3, 4, 5, 6, 7. Top 7 currencies, I think G7 currencies. And we're looking at the GDP, the unemployment rate, the interest rate, the CPI, and the real yield. Okay. And then you're getting a total score, right? So this is a very long-term thing to look at. You're basically looking at the GDP, the unemployment, the CPI, and the interest rate to assess long-term which currency is the strongest. Long-term, the dollar is the strongest. Long-term, the New Zealand dollar is the weakest. Okay, so essentially, if you're structuring your positions on a very long-term horizon, I'm talking about months, this is a great thing to pay attention to. Or you can use it as an extra confluence for a short-term position, but of course not a very big confluence. So just an extra reason to buy or sell something. For example, you see USD is bullish here on the top of the chart. And then you also see that the CAD, for example, is neutral. So USD has a score of 74, CAD has a score of 44. You're looking for buys on USD CAD. You're looking for buys on USD CAD. That's another reason for you to potentially buy if you have some other reasons as well. I would not buy USD CAD right now. So this is for the longer term. This is really macro, a real macro view of all of the G7 currencies and how they compare to each other. Also, you can see, okay, I'm not 100% certain. Total score period over period. I think this is the difference between the last period. I'm going to have to look into this because there has been an update. So I hope that explains things to you. Basically, I would use it as an extra confluence. Okay, I'm not really placing positions that last for 2, 3, 4 months. Not my style right now. But if I'm looking to take a position to hold it for maybe 2 weeks, 4 weeks, 1 month, month and a half, I'm going to look at this. I'm going to look at the rating and I'm going to see, does the longer term picture fit the narrative? So if I want to, let's say, buy NZD/USD for a longer term, so I want to get back in, but I want to hold the trade for 2 months. I come to the real yield heat map. I see that dollar is right now the most bullish currency according to the GDP, unemployment, CPI, and the interest rate. And the New Zealand dollar is the most bearish currency. So that may be an extra confluence for me to rethink my position. That's at least how I would approach it. And once I investigate this a bit more, I'm not sure what the triangle means, but I'm going to come back to you on that. Because, yeah, this is definitely an update. Yields staying sticky. So hello, Alan. Welcome to the stream. So if you're talking about the US yields, definitely. So with a rate cut, you would expect the yields to go down. Let's see the 2-year. 2-year, okay, 2-year did go down on Wednesday, but the 10-year is a bit more important. The 10-year is not directly impacted by the Fed interest rate. The 10-year is mostly made by the market. Let's see the 30-year. 30-year is up as well. Okay. getting some action. So this is actually pretty important. I kind of forgot we got the meeting on Wednesday, and you would expect with a rate cut that this thing goes down, but looks like the bond market doesn't want to play ball. The bond market thinks let's sell bonds, let the yield go up. So the US government would definitely like to see yields go down, not up. But this is what the bond market thinks. So interesting development, actually. I know I said it's a nothing burger, but it's not a nothing burger. Thoughts on Bitcoin? I think Bitcoin is right now in a crypto winter. So in my opinion, Bitcoin seems corrective, seems flat. Broken some key levels in my opinion. So broken this support. Broken the trend line right there. It's below 100K. For me to be interested in crypto again, I want to see it go above 100K. So I would need to see it go above 100K like this. Okay, that would be great. If it doesn't happen, I'll be more patient. I have my investments in crypto, but short-term trading, I'm not interested unless we go back above 100K. Spreads don't allow for 1 to 3 month scalps, not convenient. This is the last A1 stream, Marco. Really? Is it? So this is the last A1 stream for the year. Okay, I didn't know that. Thank you for thank you for the heads up. But I'm ready to stream next week. So if A1 wants me to open up some streams next week, we can do it. Do you think the markets are getting too algorithmic for retail traders to keep up? So I covered that. I don't think they're getting too algorithmic. I think you can still make money in the markets. I think there's still opportunities. It is a bit harder, but if for swing traders, it's not a problem. For scalpers, yes, your margins are getting smaller and smaller. As you get more algorithmic traders, the margins for scalping are smaller and smaller because the algorithms are so quick to react on the quick news. Yeah, so now there is someone talking about the halving cycle. Yes, if you look at the halving cycle, we are now in the bearish part of the halving cycle for crypto. That is totally correct. So that's an extra confluence for me to not do anything. I'm not going to be the one to sell Bitcoin, but for me to buy, this is not the best scenario. The halving cycle, by the way, the bearish part of the halving cycle ends in, I believe, November 2026. So until November 2026, I'll be pretty hesitant to buy. Good call on booking profits on NZD/USD. Liquidity is fading. Yeah, I think it was a pretty good decision. Alan asks, this is the last stream of the year. I have the same question. I don't think it is, but maybe. Nick and Chris make 15 to 18% per year on average. I think they do, which is absolutely amazing. Nick says this is the last stream. Okay, so then see you guys in the next year. Let's see. NASDAQ falling now. Aussie and US 30. Do you have an application for the EdgeFinder, or is it just the website? No, just the website. So you can use it on your PC. You can use it on your phone. Just open up the EdgeFinder, log in. That's it. Pretty fast. Works on every device. Simple. You can even have it in your car. If you have a browser in your car, you can have the EdgeFinder in your car. So check it out if you have like an Android car device or whatever the name is. Triangle is delta. Yeah, that's what I think as well. The triangle is delta. I'm just not sure which period it's looking at. So maybe it's the last month, maybe it's the month before that. I'm gonna have to look into that because it's new. Go to the A1 trading page. There you'll find the triangle is a black entity. 40 billion is short. Data treasury buying should have pushed them lower, but the bond market calls bluffs. Yeah, so it looks like the bond market doesn't want to go down. The bond yields don't want to go down. And it's a market just like any other. You know, it's like buying crypto. If there's buyers, it goes up. If there's sellers, it goes down. If people keep selling bonds, yields go up. It's an inverse correlation. If people keep buying bonds, yields should go down. So looks like there's bond sellers and they're calling the bluff. So Alan knows pretty much more than me on the topic for sure. But something that I know, that if there's a rate cut and the 2-year goes down, so the 2-year goes down, see, it went down on Wednesday, but the 10-year goes up, you have a problem. 10-year goes up, you have a problem. Problem is the bond vigilantes don't believe the US is a great, let's say, place to park their money right now. Okay. What I think that they're seeing, the same thing that I'm seeing, is inflation is elevated, way above target, and they're cutting interest rates into high inflation. They're planning to cut even more. Fed watch tool. Whoop, let's see. So the Fed watch tool, they're planning to cut by December from 350 to 375 to 300 to 325. That's what the market has priced in with elevated inflation. Do you see the problem here? Because I definitely do. And trust me, the Fed doesn't care about you or me or Nick or Chris or anyone but themselves. They care about politics. They care about getting elected, especially now that Powell is going to be gone. I liked Powell, the new guy, maybe a Trump puppet. There's Miran, Governor Miran just calls for 50 basis point cuts because he wants to suck up to Trump. That's not a way to run a country. That's pretty bad. So essentially, it's all about politics. It's all about getting votes. They should keep interest rates high to put inflation under control, right? Inflation should be around 2%. I think everyone can agree that is a healthy mark. But I'm only 27 years old. I don't know anything about the markets. Maybe I'm totally wrong. Maybe these guys at the Fed have a lot more experience than me, so maybe I should just be quiet. Robohola, hello. So I will wrap up the stream here. Thank you very much for watching, guys. My game plan is still to try and get on the pullbacks on silver, but I don't think we're going to get any pullbacks. To see if I can re-enter NZD-USD a bit lower. I'm still short on the US dollar. I'm neutral on crypto. Stock market, I'm not sure about. I'm not sure how the stock market is breeding right now. I don't think it's super bullish, if I'm being honest. So my best currency, best play is NZD-USD for buy setups. If this is in fact the last stream, thank you very much for watching. I will see you in the new year. I hope everyone has a great holidays and a great, let's say, new year. Thank you very much for watching. And yeah, that's it. See you in the next video. Goodbye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.